been 244 years that America has been independent, but I want all of you watching this video to be financially independent. Hey guys, my name is Abir, and in this video I will show you guys the 60 stocks that I handpicked, and those include dividend stocks, growth stocks, and a few risky stocks, but if they return well, they can make you big money. So with these 60 stocks, I will not only show you how much I will be investing in each of them, but also the upside of them. And later on this channel, you will be seeing different videos coming out for each of these stocks. So if you're interested in these kind of videos and you like the effort that I put in, make sure to hit the like and subscribe button, and don't forget to hit the notification bell so that you get notified every time I upload a video. So without further ado, let me share my screen and show you guys what my 60 stocks portfolio looks like. Hey guys, so before starting this video, I wanted to make sure that you guys are well aware of my research process and how I come up with these 60 stocks. So in my previous video, if you haven't already checked out, I will leave a link in the description box below. I have shown you guys what is the difference between a trust and index fund, and what are different and most famous and with the most market value or market cap indexes are out there, and how can you invest in those. So the only disadvantage I see with the indexes is in the bull market, where very few of the stocks are gaining so much money that the distribution of these stocks, say for example in this case Amazon only has 4.52%, but if you see the overall net gain for the past 4 or 5 years, Amazon probably dominated the most among all these shares. So that's a disadvantage, and that when you buy in with a index fund you come across. The advantage here is obviously you grow with the market, and overall for a market in US, usually all these index funds, whichever you buy, will over time will show you benefits and gains. But long story short, last video I showed and explained everything clearly in that video, and how I came across all these stocks and how I feel about investing in these stocks. So in today's video I will begin part 2 of the last video, so it'll be a continuation from my last video. So the 60 stocks that I come up with are listed here on the sheet. I will link the list of this in the description box below as well. So if you are interested, you can go ahead and click on that to get a better idea. And here's what I will do if I invest $100 in the stock market. So if I were to spend $1,000, $10,000, or $50,000, or even $100,000 or $1 million, what I would do is I will use the same formula what I've used here. So these are my top 60 stocks to pick. And if you see here, I have invested in the growth stocks with 60% in the column A, basically the top dominating stocks for the last decade or so. Then we have only dividend paying stocks, so we are relying on these stocks because of their dividend. So there are a few growth stocks, dividend growth stocks, for example Lowe's here, and Pepsi is also one of those growth stock, as well as Verizon to some sort, and Starbucks, Nike are also considered as growth dividend stocks. So these stocks basically pay you more as well, but I would consider them as a dividend paying stock. So these stocks will be added $1 each if I have $100, so I will invest in these 25 stocks, $1 each. Obviously, there are differences between the return over the past 10 to 15 years over time, but the overall thing here is the trend is like I will consider these companies, investing in all of these companies, 25 companies at the same value. And then in the last column, second to last actually column, I mentioned the worth taking risks here. So these if you are interested in taking some risk and gain some momentum in the market, since you already have some dividend paying stocks which will pay you, if you manage these correctly, these will pay you almost all of the year. So some months some of these stocks will be paying, and some months some other, even if they are quarterly paying dividend stocks. So that's important, but at the same time we don't want to miss the risky stocks, and investing 15%, I think is 10 to 15% is a little bit aggressive strategy, but these stocks, I personally think that these stocks are gonna go up and up, and these might return you a big value for your money. So if you were to spend $100, then JD is the stock which I will spend $1 in, and then we have Lululemon, and then we have REGN, which is a pharmaceutical company. Then we have Alibaba with the ticker symbol BABA. Then comes a list of other bunch of stocks that are some of them pay dividend as well, say for example Costco here, but Splunk is purely a growth stock. And then we have EA, Intuitive also pays dividend. Then we have EA, then we have Datadog, Shopify, DocuSign, Zscaler, our favorite Burger King's brand QSR, then ServiceNow, Walmart, McDonald's, Target, TJ Maxx, Ross, Disney, SPGI, and then lastly DXCM. So all these stocks, basically when you combine the amount invested in all of these 60 stocks, you will get $100. And this is how my growth stocks look like. If you noticed, all of the index funds I mentioned in the previous video are all dominated by the fast growing stocks in IT. So Microsoft, Apple, Amazon, Facebook, and Google are top 5 here. Same goes here. Top 5 are here. Maybe the percentage is a little different, but the top 5 stocks are the same. Microsoft, Apple, Amazon, Facebook, Google. Apple, Microsoft, Amazon, Facebook, Google. So the trend is the same, that investing in these fast growth in stocks are gonna give you better return, and this is what the index funds are doing. So you can't go wrong with that unless the whole market crashes. And is it a good time to invest in stocks? I would say it's never a bad time, because you never know until when we're gonna see the hike in stocks price. So if you are not spending your money right now and holding on to it and holding on to cash and saying that Microsoft stock will go down, and you think that the valuation is entirely based on some Fed pumped money, if you think so, then good for you. Just keep your cash in hands and see people gain the advantage of being in the market and staying in the market. But if you are like me, then you should definitely invest all the time. So this is another concept that we discussed in our last video, dollar cost averaging. So that concept also applies here. Coming back to the growth stocks, I basically think that 60% allocating to growth stock is a very decent idea, except from the fact that this worth taking risk might go down to 10% and probably invest more 30% on dividend stocks, especially if I have likes of Pepsi and Lowe's and Realty Income, Kroger stock. Stocks like these basically hold good value over time, and these are like good paying dividend stocks. But at the same time, investing in growth stocks is really important. These are high growth stocks and you can't go wrong. Amazon in just the past week has seen some crazy growth from $2,500, $2,600 to close to $3,000 in one stock price. So that's a big number. More than 10%. So if you think about it, I'm investing more in Microsoft, Apple, but my biggest investment will go in Amazon. I personally like Amazon more than any other stock in the market right now, since I believe that this business model is amazing, and it's gonna bring in some it's gonna bring in some cash from the people and the countries that you haven't heard of before, since Amazon is now expanding its tentacles to all these other companies outside of US. So international market is also having a bit of Amazon fun here. So that's why Amazon, I think, is my personal best favorite stock. So I will invest at least $13 out of 100 in Amazon. Then we have Facebook, Google with 5% each, and then Tesla. I think that investing in Tesla currently with all these with all the things that Elon Musk is saying on Twitter, it makes the stock go higher every time he tweets. So not just because of that, but also the product that Tesla has. If you think about it, it's a premium product, and just like Apple, Tesla has proven its premium service as well with all its products. So Tesla is one stock that I'm looking forward to it. And then PayPal, Nvidia, Adobe, AMD, Visa, Home Depot, and Intel Corporation are my top 13 picks out of these 60. That is why I will be investing in most of my money in these stocks. But if you have little money, or you don't want to diversify this much, as initially, I think if you have this much money, $100 or less than $500, then you should definitely start with spending all your money in these stocks, and not taking the fact away from Microsoft, Apple, that they also, Visa, Home Depot, Intel, all these stocks pay dividends as well. So these are considered a dividend growth stocks. So investing in these 13 stocks should be your plan if you want to invest in and see the growth of your stocks. Then I have another sheet. So same thing with the same 60 stocks, just this time we have $500 invested. So if you are investing $500, then you can see the difference clearly here, that you'll be investing 60% in these 13 companies, from $65 to $10 each. And then Cisco, Johnson & Johnson, MasterCard, Procter & Gamble, United Healthcare, all these dividend paying stocks will get $5 each. And then obviously we are taking a little bit of risk in investing in other companies that I think can also return. Walmart and McDonald, I think Target, McDonald, Walmart are not too risky, but at the same time, and the growth might not be as crazy as some other companies like Lululemon or Alibaba, Splunk, Datadog, Shopify. Growth of these stocks is crazy. So these are my last pick, but these are some risky stocks to and good to have. So that's it. Thank you guys for watching. I hope you guys like this video, and if you agree with my rationale that going with these stocks are gonna give and show me good return, then make sure to hit the like button. And if you are still watching this video, thank you for watching this video, and I hope I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.